Inkunzi Wealth. Folks, thank you so much for the time. Surprises?
We thought there was an outside chance, but our sort of base expectation was for no change.
Yeah. As yourself?
Look, for me it was a surprise because the speech that he read last time and what he read today, it was the same,
similar,
with the exception of him mentioning that there's a need for urgent reforms in the country, mirroring what Minister Owen has said recently. So it's a nice surprise to start the year. Yeah.
In a time when you get a unanimous vote compared to the 3-2 vote,
3-2, yeah.
The three that must have turned around really must have gotten a sense then that South Africa's economy is really in dire need here, Owen.
Yeah, I think so. I mean, and at the same time, I think some of the factors the guys consider, like the governor has said, the world looks like a much better place in terms of growth. There's some stabilization coming through, and the rand has also strengthened relative to where it was when we were last year, with the reference point having been 1490 back then, and to where it is now, it's about 1428, 1430 odd. I think there's been some nice room for them to reduce interest rates, and I think they've also considered the growth implications on the country. I was surprised though that he didn't continue to delve on the importance of this big elephant in the room, the black elephant in the room, which is Eskom, which I do think will continue to pose risks to the economy in terms of the growth trajectory there, and is obviously reducing the growth trajectory to 0.4% for the year.
Yeah.
Marginal, he says, from 0.5.
Nicky, this doesn't pander though to the notion that as a Reserve Bank, the ruling party would like them to, continue to cut growth for growth's cut interest rates rather for growth's sake, right? This is not a growth cut, is it?
Well, I think that he made the point several times, and they've often made it that they want to anchor inflation's expectations around 4.5%, that sort of midpoint of the target range. And the adjustment to the inflation forecast that they've put out has been very significant. I do think they were too negative. I think the market's forecast indicated that inflation was likely to come out a bit lower than they anticipated. And they had indicated before, we all expect this little peak to come through in the first quarter of this year because of the low base and oil prices. And it's more base effect than anything else, that they're willing to look through those sorts of technical and also shock effects on inflation. So if you look at this inflation forecast, the deterioration in the economy, the structural nature of that dramatic loss of economic momentum we've seen over the last couple of years, and the downward revision to their growth forecast, however marginal, means that your output gap increases. It means that you have very little demand pressure on inflation, and therefore I do think the cut was always on the cards. That's why we said there was an outside chance based purely on an inflation targeting regime. So I don't think you need to bring politics into this. I don't think they are catering for the politicians. It is based on inflation, and an inflation forecast really that the market had reflected long before they got to that point.
There's also room for about 2 more of these in this year.
Now, I think he did one now, if I understand it.
So I think he's targeting another one in the third quarter.
Okay, so this is room for them to breathe, essentially. Now they can just go on with the rest of the year and still maintain credibility in a sense as well.
But he did put a disclaimer there. He said it can move either way depending on the
always does that.
Depending on the environment at the time they make the decision. So, but I think that it shows that they're not afraid to cut interest rates if the environment does justify, and the metrics did justify the cut this time based on what the governor has given us.
Do you think they've taken into account the electricity hike of around 17%, which is touted, not necessarily in play and in place, Nicky?
Well, I think that they've been aware and have certainly forecasted for double-digit inflation and electricity and water tariffs, put it that way. So that goes into their model. Whether they're at 19%, no, I don't think they've quite taken that into account. So that will clearly come into the forecast going forward, in the months ahead.
And I suppose everything like Eskom, you've mentioned that is a big deal. That is the notion, that is the elephant in the room that really needs to be dealt with as well here. Do you get a sense, though, that this is playing into whether they cut in future or not, or even into this decision, whether they really should be cutting at a point like this?
Look, I mean, he has given guidance again. He said they'll let the numbers and the modeling do the talking when they make these decisions. I think for Eskom, there's nothing he can do about it. He'll leave it to his political partners to try and address that. And, the country is waiting patiently to find out if any of these steps that the president has mentioned over the past few months in terms of addressing Eskom are going to filter through. And we will have fewer rolling blackouts. We were told that we're not going to have blackouts, but what happened beginning of the year? It was back to stage 1 to probably 8 of the rolling blackout.
Yeah.
And I think that it's one area that remains the biggest Achilles tendon to the economy's growth. And I think that's why you're seeing ratings agencies, the World Bank, IMF, Economist, and the central bank itself cutting the growth forecast for the country.
Yeah. Look, we'll take a short break for now and we'll come back to the discussion as well. Then, of course, your breaking news at this hour is indeed that the South African Reserve Bank, in what might be a surprise decision, has decided to cut interest rates by 25 basis points to 6.25 for that repo.